Hi guys, this is Ray from Next Forex Trade. This is in fact the second trade or video that I've done for today. So this is just an update. I'll probably do another one tomorrow as well. Yesterday or today's video earlier did look at the setup for the trade on the AUDCHF. Now, for a few reasons, I exited that initial trade. Took profit on that. So if we go to the account here, we can say that the profit on that was around £37 minus the cost of the swap and the commission. So it's about £35 made from that trade. So that wasn't the full £100 that was going for initially on the one-to-one. But there were some reasons that I decided to come out of that, which I'll go over briefly. So the time that I got out of this was, you can see here, 20:43, which UK time was 16:43. So I'm just going to put that as a line on the chart, and then once I've discussed this, I'll tell you about the next entry that I'm going to be taking here. So this purple line represents the time that I got out, and I'm also going to put this on. I'm also going to put this on the other time frames as well. Okay, so the time that I got out is represented by this purple line. This is the hourly and the 15-minute. And the price that I got out at was roughly where the price is now, actually. So I'm just going to put a horizontal in for that. So okay. So this was my exit price. Now, the reason I got out of this is I used the lower time frames to help with the timing of the entries and the exits. We can see that I'm going to use a 15-minute for this explanation. We can see that the price had started to make price action of lower lows and lower highs on the lower time frames, and I had put the basically I'd moved down my stop loss. My stop loss originally was way up here above these levels here, right? So if the price were to move past there, I'd be stopped out. So what I'd done is moved down a protective stop. So what the protective stop does is means that it's effectively, I hate to use the word risk-free, but I mean there are instances where I could still lose on it, but effectively it was a risk-free trade. So where my stop loss was here above these, what I was deeming as a lower high, meant that should the price reverse on me, which it did, I'd be stopped out, but I'd be stopped out in profit, which was £40, and I'd still had the long position in for the maximum of £100, which was down here, I think around where this alert was here. So I'd been in a position here where I couldn't really lose on the trade unless, you know, something crazy happened in the market and the price had jumped over my stop level. Effectively, it was a risk-free trade. So the way that I could profit from it was £40 roughly, or £100. And depending on how you trade, it can make sense to protect your profits as the market starts to move in your favor. You know, especially because of what I was seeing in the price action, it was just an opportune time to exit. Now, just because I've exited there, yeah, it's less than £100 that would have been, you know, the initial target. But there's always going to be opportunities to get back in the market if the price continues to move as desired. So what I'm envisaging here is the price maintains within this standard deviation channel and starts to make this same kind of lower lows and lower highs downwards. So this gives me another opportunity to enter. And in fact, The criteria in this instance is slightly better than when I initially entered on, I think it was Monday now, because on Monday the 4 hourly wasn't really 100% congruent. It had still been in this, let's get the 4 hourly here. The standard deviation had still been, it doesn't want to move for me for some reason. The 4 hourly was looking something like this. So all the other time frames were giving me decent signals to be short on this, but the hourly, we didn't have this information here where the price had moved and broken lower to like it did here. So it was still within this standard deviation channel. Now, the fact that it's broken through this support, if you like, that the standard deviation channel was giving and has started to move lower means that pretty much all of the stars are now aligned on all the time frames. We've got some nice lower lows and lower highs on the daily, some interaction with resistance here, interaction with the standard deviation channel. The 4 hourly has now started to look bearish as well, breaking the price structure of these previous lower higher lows and starting to move lower. And I'm just gonna, before the market moves too much more, I'm just going to take this position here. So so this entry here, I'm going to take the position and then I'll explain the numbers behind it. I'm going to do this at 35. 36. The rate for GBP Swissy 1.22. Just bear with me, guys, while I do this. .68. So what I was doing there is just calculating my position size. So in this instance, I'm going for 2% risk. I'm just going to clear up some of these here, turn off these alerts because okay. Give me a few more moments to set this up and I'll explain the theory behind doing this. Okay, so I've risked 2% on this trade here. And funny enough, it's a similar entry price to what I had entered previously. Where's my entry? It's slightly less, but I'm actually taking a bigger position. You can see the size here is 0.68, whereas on my previous position it was 0.28. Now, just because the position's bigger, I am doing double what the initial one is because there are more things that seem to be in favor here. But let me. What's the best way to start on this? Okay, let's start with a stop loss because that's basically the kind of premise for the whole trade. So my stop loss, what I've done in this instance is place it. If you can see, it's above on the daily. In context of the daily, we can see it's above 2 days ago. So Monday's candle, Monday's high. It's also outside or roughly outside the standard deviation channel. So what I'm trying to do is clear the obvious resistance areas. Now I could have put it above these highs here, but what I'm seeing in the lower time frame means for me that would be just a bit too conservative to have it above those levels. We've got some good downward price action on the lower time frames to warrant having a stop loss not so far away. So what I've done, if we look at the hourly, is that I've cleared about the last two lower highs. If I put a standard deviation channel around it, so this, if we're looking at this as the previous the downward movement, lower highs, lower lows, I wanted to clear this here, I wanted to clear this here, and I've cleared this here. So it's about three lower highs that it's away from the price action. So if the price does, for whatever reason, start to take out these previous lower highs and move higher past this one is here as well, I can still maneuver out of it in terms of taking my stop loss to break even. And in fact, that's something that I did on the other trade I took on GBP JPY earlier today. It wasn't giving me the price action I wanted, so I broke even on that. I took out the position. So positioning on this is, I'm happy with the positioning on this. Obviously it may not go to my favor. The timing on this as well, one thing you've got to be wary of when you're trading the Asian session, going into the Asian session, is your broker is likely to have wider spreads. So you can see here, this white line that goes across is the bid, and this red line here is the offer, and the distance between them is the spread. I don't think you can see when I bring up a ticket, so I will try and identify that in the market watch. So we're trading AUDCHF here. So yeah, you can see the spread here. You see this exclamation mark in the column on the market watch. It's saying the spread is 5. Now in normal, or the more liquid market hours, so when the Asian session gets in fuller swing into the European session, that spread is probably going to be nearer to 1 or less than 1. But because it's just been market close, typically there's going to be wider spreads, so you need to be just wary of that if you're taking positions at this time. I also waited for the market to close and reopen before taking this position, because of the fact that when shorting this, there's actually a cost to me on shorting this in terms of the swap. So this setup was maybe just before market close, but I didn't want to take the position then because it's just additional cost for maybe a few pips difference in the entry. I much prefer to wait for the market to close, not incur the cost of the swap, and take a position. So we've got this entry going for 2% risk with 1-to-1 reward to risk, which still looks pretty viable based on the daily. Much of the reasons behind the first entry is still here, because I've got take profit before these previous lows here. That makes sense. It's a tighter, it's in fact a lesser distance that the price needs to travel now as well. So all in all, yeah, we'll see how this one pans out. If I need to manage it, I will update you to how it's been managed. But yeah, we'll just have to see how this one goes. So the total profit, if this comes to hit take profit, would be £200. The total loss on the table is £200, roughly, give or take. Okay, and I'll update you tomorrow with another video and explain the other trades I took today as well. Thanks a lot.